Hi, Assalamualaikum and very good morning to Sayyid Zain. My name is NURATIQAH Hazirah binti Muhammad HAFIZ and my matrix number is UDE 190202. And today I will be presenting about a company background that I have created. Firstly, I as Miss NURATIQAH Hazirah as a CEO at Scarf 2.0 Sdn Bhd which is the company that produces all types of scarf including shawl, square scarf and others. As our company production is required to produce scarf, we are required to use a lot of machines such as cloth finishing machine, knitting machine and also crochet machine and many others. And so because of that, our company have to provide our production worker with a big factory that can manage a lot of number of workers and all type of machine. And firstly, our company was first established on the year of 2015 and since then, our company have been operating for 5 years already. And next, as we have done our best wishes to locate our headquarters and our factory. Our headquarters and factory was located at Jalan 68 and Jalan 88 Industrial Estate, Kemuting, Taipei, Perak, which is just side by side. We choose the location to be close by because this way the working process that involving the staff that work both at headquarters and factory can be more easier. And as our company did not have any branch or outlet, we are doing we have our own website for online shopping. And as we have our own website for online shopping, we have to provide our customer with delivery service as well. And to making it the delivery service more easier, our company have our own van for delivery purpose. And next, our Scout 2.0 Sdn Bhd is very strict on our policy involving the property, plant and equipment. For example, such as for the implemented item of property, plant and equipment, qualification for recognition to be an asset, it have always to be measured at its cost because property, plant and equipment is an important component of non-monetary asset in business. And according to MFRS 116, the cost of an item or property, plant and equipment should be recognized as an asset if and only if the cost of the item can be measured reliably, and the property, plant and equipment are only tangible asset if it is expected to be used more than one period, according from paragraph 5A to 5B from MFRS 149. And next, our company chose a revaluation model. This is where after recognition of an asset, an item or property, plant and equipment whose fair value can be measurably should be carried at a revalue amount. Next, I will explain the situation for 3 years. Firstly, the situation for year 1. On the year of 2016, our company purchased a new knitting machine for production purpose at the price of 30,000 from Sdn Bhd. Our company purchased another machine because our company received a lot of requests and demand from our supplier and its customer. So in order to increase the speed of production, we have to buy another machine. And next, our company management have estimated that at the end of the year, the value of the asset will be 20,000, and the machine is estimated to have a useful life of 3 years. And next, the fair value less cost to sell of the machine should be 25,000 at the end of the year. Lastly, the carry amount for the machine as stated in yearly financial statement is 15,000. From here, we can see that the carry amount of the asset is lower than the recoverable amount because the fair value less cost to sell is 25,000. So from here, we can see that the recoverable amount, which is 25,000 higher than the carry amount. So there is no impairment loss occur. This is why the machine impairment need not to write down. Next, for situation for year 2, on the following year, which is on year 2017, our company made a decision to buy a new building which was also located at the same location at the price of 850,000. The purpose of buying a new building is because the factory that the company owns for production cannot bear the number of workers that already increased starting from last year. And the building are carried at the late revalue amount, and the cumulative revaluation per surplus for the building is 15,000. And next, the fair value less cost to sell is RM 750,000. And the value in use for the building is 780,000. And also the carry amount estimated at the end of the year is 840,000. And this from here, the property, plant, and equipment for the building should be recognized as impairment, as we can see the carry amount of the asset is more than fair value less to sell, because the carry amount is RM 840,000, while the recoverable amount is 780,000. And the calculation for impairment loss is carry amount less to recoverable amount. So 840,000 we have to less to 780,000. And then we got the impairment loss of 60,000. And then the journal entry is, the detail for the journal entry is debit impairment loss 55,000, and debit revaluation supply 50,000, and then credit building 60,000. And next, we will move on to the situation for year 3. The following year, which is 2018, our company management made a decision to buy a new van for delivery purpose, because our demand have increased at the price of 60,000 to fulfill the request and demand from customer on online shopping website. The van is estimated to have a useful life of 10 years. And the fair value less cost to sell of the van is 14,000. And next, our company also estimate that the van will generate future cash flow for 5,000 per annum for 5 years. And next, our company also estimate that the value of the asset will be 42,000 at the end of the year. And the cumulative revaluation supplies of the van is 5,000, and the carry amount for the van is 55,000. From here we can see that the property, plant, equipment for the van should be recognized as impairment, and we have to write down, because the carry amount of the asset is more than the fair value less cost to sell, because the carry amount of the van is 55,000, meanwhile the recoverable amount of fair value less to sell is 40,000. And next, the calculation for the impairment loss is 55,000 less to 42,000, and then we got the impairment loss of 13,000. And then the journal entry detail is, we have to debit impairment loss, which is 8,000, and then debit revaluation supplies of 5,000, and then we have to credit the van of 30,000. And that is the end of my presentation. Thank you.